So it's May 25th, and this is the video log. It takes 30,000 to a million. I'm going to take you through the account, and then we're going to play a little bit with a very informative heat map, and I'll show you how you can do way more than just check the prices and the way the markets are going today on this heat map. But first, I'm going to take you through the account. Oh, that is the heat map. That's not the account. Excuse me. This is the account right here. It's very zoomed in, so you can clearly see it in case you are wondering what the account is all about. Today was a green day. This is the year chart. This is the day chart here, excuse me. I'm sitting at 161. It's a green day, so kind of confirming that a little bit, that reversal Tuesday hypothesis that I had yesterday. But we won't know until tomorrow. I'm a little bit concerned when the rebound is a little weak and the reversal Tuesday is very strong. It can drag the whole week down, so we'll have to wait till tomorrow to find out what's going on this week. But nevertheless, up about 3 grand, sitting at 161, 268, and these are the options positions on the right. I'm going to scroll down fairly quickly. You can feel free to pause the video player at any moment to try to find out exact positions I have, and all the information you need is right here in this little box on the right is the percentage change and the dollar amount change of the day. So as I'm scrolling down, you'll find out that I have a lot of Chinese ADR leaps, which is probably the wrong way to go about it, because if these leaps if the ADRs get delisted from the NYC, these stickers will no longer be valid, and it'll probably get settled at cost of the option, which would be around 0 at that point. So I'm apparently strongly betting that the issues with the delistings get resolved and the companies remain listed. The companies in question remain listed, but as I read more and more articles, that's the prospects of that happening are actually looking kind of bleak, and I really hope I'm wrong, because I have money riding on this, and I've already lost quite a bit of money on it. So this is the equity positions. Apple had almost a flat day. The Chinese ADRs that I have, the two of them are kind of up. VIPS, VIP Shops, is up a significant amount, 7.3%, which is kind of an encouraging sign, because it could signal kind of a bottoming process if the most volatile stocks like VIPS are holding up. Realty income was modestly positive. Same thing with Main Street Capital, was up 2.27%, which is good because I'm very heavily invested in Main Street right now. I'm trying to build those two positions up, O and Main. Goldman Sachs was about flat, up 0.3%. I have options running on that, so hopefully they expire worthless so I can sell options again. But I need Goldman Sachs to be close to $325 price. Please. Thank you. Smith & Wesson went up a considerable amount today for reasons that we're not going to discuss on this channel. I'm sure everybody is aware. And you can get better commentary on that elsewhere. DD was up 15% as well. And Energy Fuels, I got stuck with 200 shares, so now I got to keep them. Maybe sell calls against them, try to exit the position. I'm not sure what to do with this at the moment. It dropped quite a few dollars down, way more than I was prepared. And now I may have to ride it out until the next spike in uranium. But we'll see. I may have to sell it in order to keep the account healthy, because if I go into the investing tab here, and you'll see that my margin is almost full. I'm at 47.46%. 50% is full margin, which means I'm 100% levered. That means half the money is borrowed in the account. That's what that percentage stands for, in case you were wondering. You'll see here I have margin used to 145,600, and my equity is 161. So the total account value right now sitting at $306, almost $307,000 worth of stocks and options in this account. Almost half of it is borrowed. So I'm very levered at the moment, which can be dangerous. And if there's a big drop, I'll be in big trouble. But hopefully I am swift enough to convert some of this equity into leaps, because I'm confident then that at least in a few years the valuations of all of these equities in question will remain similar to today, or at least they will reach similar levels to today, at least by 2-3 years. So I will be buying leaps if that happens. That's my backup plan. So make sure you have a backup plan. Hope I'm quick enough to execute this, but I really cannot afford to drag my feet around here and just play defensive and sit in cash when inflation is running at 10%. I mean, that's a little bit ludicrous, right? Like, don't you guys think it's hypocritical of the market a little bit to drop when the dollar is actually having issues, right? I mean, and it's a bit strange, right, that the dollar is actually very strong against other currencies, and we're having 10% inflation in the States. So imagine what kind of inflation the world's having. I mean, it's a complete mess. So everybody's going into the dollar, and we're still having inflation. So crazy world. But when there is inflation, it will eventually get reflected in the stock market. Stock market survives inflationary periods fairly well, about on par, and it does not lose you any purchasing power. So I know that if we have sustained inflation over a longer period of time, the market will persist. It's happened in every hyperinflation period in the world, basically. A lot of the businesses can pass that inflation on to the customers, and they survive. They survive these periods. Businesses do. So cash flow is king in those situations, and companies know that. A lot of people know that. Business, stock market, and gold. That's my advice. So, anyways, $307,000 in the management here. Total return, Apple and Realty Income are the only companies that have positive at the moment. Equity-wise, Apple sitting at the top, then Goldman Sachs, and then Mainstream Capital at number 3. So, a lot of you enjoy watching the weekly chart, the monthly chart, 3-month chart, year chart, all-time chart. So I'll show you those, since you guys are always curious to see that for some reason. But this is a daily chart, up 2.25%. Weekly chart still positive on the weekly chart. Monthly chart down 4%. 3-month chart down 7.32. Yearly chart still in the green, thankfully, up 6.77%. All-time chart is a lot lower than it used to be, sitting at plus 123%. I always have to disclaim here when I show this chart that I started investing somewhere around here, August 28th in 2018, and I had no money in the account at that time. That's why the line is flat. And then I started doing this challenge, and you can follow the journey all the way till today. So the peak was around $200,000 account value, up 177% from the start. So that's the all-time chart. All right, that's enough account talk. Now, next what I want to do is I'm going to take you through the heat map, and I'll show you some tricks that you may not have been aware of that you can do on the heat map. This heat map is that I'm checking out is at finviz.com, finviz.com. It's one of 2 websites that I really visit for quick stock market analysis. That one and stockanalysis.com, basically. Those are the 2 ones that I like. If you have something that you like that you think I would like to, just type it in the comment. I'll check it out. Okay, so I'm gonna go here in the browser cam, and I'm gonna unlock this window and make it more visible for you, like this. Okay, this is a little bit better. I know I'm blocking part of it with my camera, but that's okay. So over here on the left, you can actually choose what you want to do. So this is today's performance, right? So we've got mainly Amazon, Tesla, big market movers, Nvidia, Microsoft's up 1%, Apple's pretty flat. Energy moving up, of course. Energy's been really strong. throughout this whole process here. And one of two companies that I really like here, Blackstone and BlackRock, the two blacks here in asset management, I really like. Not just because they're doing well today, but you may see why in a little bit. So on the left here, you see this button which says you can check out the week performance. You can see here that energy is still winning on the week heat map, and Google is losing, Tesla's losing, Facebook's losing, Cisco is losing, Alibaba is losing. This company here, Broadcom, is losing. I wasn't even sure what Broadcom symbol is. It's a weird symbol for, or ticker rather, for Broadcom. Maybe they renamed from something from a long time ago. If you know the answer to this, let me know. And then there's Block Inc. Square. Shopify down 7.63%. Going on the one performance, it's a sea of red. So the market's not been doing well. Market down 20%. I mean, Walmart down 20%. Costco down 20%. Amazon down 23%. Tesla 24%. Google 11%. Big names. Microsoft 10% knockoff. And then a bunch in the real estate and all kinds of industry. Biotech's always in the red. Big Pharma holding okay. And then energy, clear winner. Oil and gas, winners. Oil, gas, midstream, winners. Everything oil and energy related, winners. Basic materials, winning slightly. Go 3 months. 3 months is even more brutal. The only thing that's green is the healthcare, big pharma, energy. The reason I say big pharma because you have like biotech and medical device industry, which are red. And so this is, healthcare, biotech, medical here below. And then healthcare plans, stuff like that. So you got to make that distinction. And then energy is on the right. You can see all the greens. Utilities are green. Basic materials are, some are green, some are not. Agricultural is green. Interestingly enough, AT&T is in the green, probably because it got so discounted over the years. AT&T is an interesting pick right now at this point, actually. You'll see why in a second. So 6 month chart, it looks even more bifurcated than the 3 month chart. It's basically the same thing except 3 months later. But it's not the only thing that you can do here. This is the 1 year performance. Energy clear winner once again. Amazon down 34%. Facebook down 44%. These huge moves by Facebook. JP Morgan is actually down on the year chart, but it's had a recently did pretty well. Citigroup down 32%. So a lot of very interesting moves here. Semiconductors, somewhere Intel down 25%. Intel's looking good now, in my opinion. But consumer cyclical, right, this red square right here, unarguably the biggest loser in this whole thing. It reflects so strong, like the consumer pulling back and financial positions like just tightening. There's like no green company here at all. I'm trying to find one, but there isn't one. There's just no green anywhere. And look at the numbers. Like, I don't know if you can see the numbers on the right, but they're like 50, 60% down, 70%, 80% down. It's just absolutely murdered. Wish down 80%. Fiverr down 80%. I mean, it's absolutely crazy. Etsy down 57%. The Chinese ADRs aren't even the biggest losers in this whole thing. So it's not just a Chinese story. It's just big retail. I mean, it's just getting decimated. Farfetch down 83%. I mean, Wayfair down 84%. These internet retailers just getting smashed. Carvana down 88%. Ludicrous. Starbucks down 35%. So anyway, a lot of murdering over the past year in the consumer space. So you also have year-to-date performance. But then you can keep going, okay? So you can look at like relative volume, for example. There's a lot of information here that you can look at the market. This is, by the way, the whole world, right? It's not just the US, because I just mentioned the Chinese ADRs. you can look at relative volume. You can see, you know, how much a stock is traded relative to, I guess, its size. So one would be average, I'm guessing. I don't even know how they measure it, but size represents market cap. Okay, well, I know that. I'm trying to read for some labels, but I bet you that's what it is. I think one is probably normal volume for its market cap. Higher number, like the lighter it is, it's traded more. Like Intuit and Snap and VMware probably traded a lot more than their market cap. Zoom, Snap, sounds about right. So, but there's even more. You can just do a heat map. You can do a heat map not only of that, but you can do a heat map of their PEs. Okay, so the greener the box, the lower the PE, price to earnings ratio. So you can really kind of take a look. You can see Goldman Sachs is 6.11. I like that. But the raw materials, steel has the lowest PEs right now. Could you believe it? US Steel right now has a P of like 1 point, let me see if I can find it. 1.43. 1.43. So that's how pessimistic the market is on these guys making money in the next year. Is they've priced US Steel at 1.43. That's how much money they've earned relative to how much the market thinks they're gonna earn. Which is fair though, because they have many years where they're actually losing money, US Steel. So, but moving on, you can kind of see the PEs, but it's don't judge companies just based on the PE, right? You got to get a complete picture, just in case you're doing that. Complete picture of what the company's all about. You can understand the business and like what they do. Is that normal? Like, you need to understand like the balance sheet and where their money's at, what kind of investments they have, and why are they showing negative P or whatever, or why the P is so high, what their revenue looks like everything about the business. Not, you can't just look at that one number and make a determination and say, okay, this is a good company, underpriced because the P is low. Just like these steel companies, it doesn't mean that U.S. Steel is undervalued, although it could be. But there are just many factors that go into it. So make sure that you do thorough due diligence and research before you decide to pull the trigger on a stock. But I'm just showing you a way to kind of search for something in the market that looks interesting. For example, the auto manufacturers here look very interesting to me. The Ford for sitting at 4.47 price to earnings ratio. Stellaris, I think, what was it? Stellantis, I'm sorry, it's not Stellaris. It's sitting at 3.11, so could be worth digging into that company and figure out what's going on there. You can see Amazon's PE, you can see Intel is sitting at 7 price to earnings ratio right now. Citigroup, 6.21. Citigroup's going to come up again in a second. Rio Tinto is always interesting to me. It's one of my favorite companies that I don't own. It's sitting at 5.55. So Vale is a Brazilian steel producer. I just flashed right now, sitting at 3 point something. But Brazil, there's a risk premium there in Brazil. You can do it by forward PE. Doesn't really tell you much, but energy looking good. You can do price to sales ratio, which is a very modern way of trying to value a company. Apparently Sony's doing okay here in this compartment. But you got Ford sitting at 0.39. That's a really low ratio. The lower the ratio, the better, valuation wise. We got Citigroup is one of the few green ones here in the financial sector. Santander is a foreign bank, so that one you got to do extra homework on if you want to put your money there. The oil sector still looks good. Still looks like not expensive at all. China Petroleum, that's an ADR again, so I wouldn't necessarily rush to buy that one. Probably buy one of the American or the British ones. if you're interested in, if you still want to do oil. The steel one's obviously in the green. But you can see how the price sales ratio in a lot of these companies, especially the big tech, are not that great. So there's still room to fall there, although I don't think that there's that much room for them to fall further for other reasons, not just the price sale ratio, right? Moving on, you have price to book, which is not that interesting. Dividend yield. So if you're looking, this is a cool one, right? If you're looking for dividend yields, you can look at this. Just remember that the dividend yield doesn't necessarily mean that it's safe, especially these energy companies that are cracking out like 25%. This Brazilian one's cracking out 25% dividend, and then China one's 15. Shell and Exxon and Chevron are a bit more reasonable. So does, where was it, BP? A little bit more reasonable, but those don't necessarily last forever. So when their business declines, they're cyclical businesses, commodity businesses are, known, they're notorious for their wild up and down multi-year cycles. So I wouldn't necessarily rush to buy those either. One thing that's, stands interesting here is the telecom services. So they're quite a bit more stable than the commodity companies. So if you're looking for high dividends, for example, you could look in here and just take your pick. You got Verizon sitting at 5%, that's solid. Okay, AT&T sitting at 5.21, that's pretty solid. I think they may have cut it, but that 5% is probably, I think it was higher maybe, or maybe the stock just happened to rise. Yeah, I don't know. I have to do some research on that. But there are plenty of other ones with high dividends. If you just got a small, mini portfolio of just utilities, you can telecom services. You can pull in quite a bit of dividends yearly. So interestingly enough, Intel has a high dividend, 3.46, and the financial sector is known for having decent dividends. A lot of the Canadian banks have really good dividends actually, but you have to pay foreign tax on that if you're an American citizen. So you gotta watch out for that. You factor that in. ING, wow, ING is sitting at 6.59. I didn't even know they existed. I thought they got bought out by somebody. Or was that just their trading platform? I think their trading platform, ShareBuilder, got bought out by E-Trade. That's about as far as my knowledge goes. I haven't looked into this company. Very interesting. But you can see Citigroup again coming up. So Citigroup's come up quite a few times here. You can see Rio Tinto, one of my favorite companies that I don't own. It's giving out an 11% dividend at the moment, which is crazy. BHP I'm not as big a fan of. They're giving out 10% at the moment. Big Pharma's also got some pretty nice dividends that are more sustainable than the energy ones. Regional banks, if you know what to look for, they're a great hunting ground. There's a ton of them. But other than that, I really like Blackstone and BlackRock for dividend plays. I like those two companies, period. So that's another interesting thing you can look at, dividend yields at a glance for the entire market. So consumer cyclical, look, none of them are paying any dividends out. The only company is eBay, paying out a $2 dividend. So just worth noting. You don't only have to sort it by those though. You also can sort it by earnings per share growth over the last 5 years. Now keep in mind, this includes their stock buybacks, because you can manipulate earnings per share by doing stock buybacks. You goose it up a little bit. So you have to take all of these statistics and numbers with a grain of salt. They all work together cohesively, independently for each company. All the numbers together to put a picture of the company. They don't individually on their own. They don't tell you anything about the company. So it's always part of a puzzle that you have to put together yourself, or someone has to put it together for you, like a financial advisor or something. So it looks like the biggest EPS over 5 years growth companies are Amazon, Tesla are the big ones, Nvidia, got Chevron. Well, let's even ignore the entire energy sector here. But interestingly enough, HSBC up 56% improvement. We got Barclays, Citigroup only 16. Let me see BlackRock and Blackstone here. Blackstone up 39, BlackRock 15, not bad. AIG stood out to me. It's an insurance company. But Tesla, Amazon, Nvidia, good. Those were kind of the big, American growth stories, right? What is this one? CMG, Chipotle, Mexican grow. Interesting. I thought McDonald's bought them, didn't they? Maybe I'm wrong. That's pretty crazy growth. Semiconductors. So besides Nvidia, we got AMD and MU, Micron Technology growing at 84%. So it's really impressive. And actually, MU might be a good play right now. I should search it up after this. Okay, so short float short. You can see how all the big companies have been left alone and all the little ones are just getting destroyed by shorts, right? This is a really interesting heat map. It's really cool looking. So you can see where all the pressure is put. Polo Global Management, right? I don't even know what these companies are. Hashi Corp. No idea what that is and what they do. Shift for Payment. No idea. Well, I guess I can tell it's a payment company. Global Foundries. No idea. Coinbase. No idea. Just kidding. I know what Coinbase does. But it's being very heavily shorted. Li Auto. Heavily shorted. In the consumer sector, we got Chewy heavily shorted. Carvana, rightfully so, heavily shorted. So, very interesting. People are starting to short oil and gas, apparently. But one thing that's always cool to look at is how shorted the biotech is. Biotech is such a crazy sector of the market, right? Because they're all about approval of drugs, and if you want to short something, that's probably where you want to go. Short some biotechs. Of course, you can get burned, right? One of their drugs gets approved and it gets a really big leg up overnight, but it's going to completely ruin your position. But if it doesn't happen, then it's free money, right? The company's just going to decay over time. Rocket companies, heavily shorted. But that's not all. You can sort by analyst recommendation. We're going to skip that. And you can even see a very interesting stat here, which is the earnings day performance. So how they did on their earnings. And this tells you everything you need to know basically about how good people are at predicting what's going to happen in the market, right? I mean, this is so wild and all over the place. So people have just no idea, like, it's 50-50, like how the stock is going to go on the earnings. I mean, there's no correlation here. You got the giants splitting, right? Microsoft up 4.8, Apple down 4, Google down 4, Amazon down 14, Tesla up 3.23, Facebook up 17, like, you got crazy stuff. Walmart down 11, Procter & Gamble up 3. So, Visa up 6.47, right? PayPal up 11. Berkshire down 1.4. So there's just no correlation anyway. It's just a mixed bag. Just a mixed board. No information. No information here. But anyways, I think it's a great tool to browse through and just try to find and see if you can see something interesting. I already got some ideas. Just while looking at the board, I got idea for MU, an idea for Citigroup, right? And then Blackstone and BlackRock, which I've already been following. So that's not a new idea just from looking at this. But also Intel, T-Mobile's, I got to figure out what's going on with T-Mobile. Not T-Mobile, I'm sorry, AT&T. And start, maybe looking at the steel sector and see how how negatively priced it is compared to what the future is going to look like. So I got some really interesting ideas just looking at this, and maybe you can too. Maybe you can find something interesting that whatever you're looking for. Like I like companies that make money. Maybe you're looking at something else, growth over the last 5 years. I don't know, but everybody's different. Everybody's investing style is different. So I hope that helps you, and that maybe you found something you didn't know before. Maybe you didn't know that this was available on the FinViz map. So if you didn't, you can explore, have fun. Then you can try their screener, or you can try the stockanalysis.com screener, and find companies that you like that way if you're searching for some good deals in this bearish market. Hopefully tomorrow's a better day than today. And especially yesterday. But I have a feeling that we're gonna make it through this week, and that's good. It's a plus sign. Alright guys, this video's already been pretty long, so I'm gonna cut it right here. Hopefully I'll make another video tomorrow. See you then. Peace out.